Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Welcome back. I hope you all had a nice week, or at least a very scary week. Basically, we all seen, what happened to the U.S. market. And for me, basically, this week is a bit of a bittersweet. Bitter because a lot of my position got stopped out because of the large downward move in U.S. market and also in UK and around the world as well. A lot of my position just got stopped out with quite a bit of losses because of a large gap, and there's nothing much I can do about it. So I closed up my position, and then within a couple of days, or in a day, I think, my system said go back in because everything has gone over quite extreme, basically, and gone to the short side. So within a day or so, I just go straight to selling in the shorting position instead, because that's what my system tell me to. And I thought, well, I probably missed the boat. I mean, the downward moves so much, and thousands of points and things at any one time, or 800 odd points in US and kind of thing. I thought, well, I missed a lot, I missed the boat. But my system say go short. I go short. What can I say? And basically just licking my wound on sideline, and then suddenly the US market, for some reason, continued to go down and down and down and down. So for the past, basically the week before, Thursday and Friday, and then the past week, in the space of 7 days, 7 trading days, the US Dow Jones moved down like 4,000 points, 3,500, 4,000 points thereabout, in 7 trading days. That is huge. And according to what CNBC News is saying in US, that's only have happened back in 2008, 2009, subprime crisis time. And this basically it surprises me. It suddenly, normally a big gap go down. I normally miss the boat, even though my system say go in, and I will go in, but I don't. Normally I would see a rebound on the market, and so I would go in on this after a large gap, gone in, reverse my system, my position, because my system says so, and then most likely the market rebound, and I get lost. I mean get some my position get decimated a bit more again. So when I come down from when my systems tell me to get out, I lost quite a bit because of the big gap, and then I was expecting the market just bound on the next day, and therefore, when even though I follow my system probably show me another loss when I go into short my position, my original positions. But unbeknownst to me, because of this large gap move over 5 trading days, I make all my losses back and then some, and that is quite what you call. It took me a lot of time to actually learn that in the past, because previously I was like any new trader, I will basically go in and make my money, and then the market suddenly reverse. Even though my system said reverse and get out, I will get out most of the time. But when the system said now time to go short, go reverse the position now, I would stop. I would freeze like a rabbit in front of a headlight of a car, and I won't go short. Now I've done that through a few times, and I learned my lesson, so I basically follow. And then so now, like this week, when my system say go short, after I have just stopped myself up because of the large gap, I follow, and the ferocity of the downturn is basically surprised me. But that once again shows what trend following is about. You can never find out what the market is going to do. You can never pre-tell what the market is going to do. Everything was happening. Like last couple of podcasts I've been saying, China is having a virus. It's spreading around Southeast Asia. US and European market don't seem to care. Everything seems to go up. Dow Jones, I think last week was still making a new high or something, or the week before. And it's like nothing much happened, And I talk about it a couple of times on podcasts. I say, now suddenly something happens, go so near to Italy. I mean, basically last Sunday, in my podcast, I already said that in Italy suddenly there's outbreak of the coronavirus, and then Italy followed China's footstep to lock down some of the towns, and that basically spooked the European market. And when the market opened, Europe gone down big time, and then that spread over the U.S. Again, it gone down big time, and which I got hurt on my position, and then it spread around back to Asia again, those kind of thing, and all of this basically I see all this downward move basically is quite it was surprising to me, but I've seen this before. I remember 2007, 2008, those kind of thing. You've seen that the market in US suddenly just gone down 800 points. The next day, boom, go back up 600 points. And then the Fed comes in, calm the market, whatever, some few rate cuts, and then the market slowly still tanking, go down. Then you find out because the financial institution is betting the supply market, whatever thing they do, or CDO, CDS, I don't know what the names are, and effectively, basically just taking the money and run on the subprime, just become sending money to people who is not supposed to have the house and qualify and sell and keep on selling and then have derivative on it on top of it. So they just bloom mushrooms to into a monster, so to speak, and nobody expected that to happen. But this time around, I feel very similar things happen. All these large move up and down moves, and it just feels like deja vu to me. But also on the side, I can also see some funny things happening. This is why I thought that all this forced liquidation that should happen last week. Basically, the scare from Europe in Italy causes big gap jump in Europe as well as in US, and that I think because most people are long in the market in US, and they didn't expect much worries from this Chinese virus thing, but then because it's sudden gap, I believe they probably cross upon a no return or some predefined stop loss level. So a lot of company, I suppose, hedge funds, is forced liquidating. Why is that thing is forced liquidating? Because gold is supposed to go up in market turmoil. So on Monday, you've seen it actually gone up. It gone from, I think, 1650 or something, go straight back up to 1691, almost 1700 area. But within the same day, come back down $40, and then next day $20, $30, $40, and 5 days, like not $60 or something. So over the past 5 days, it moved up from 1691 on Monday back down to around 1580 on Friday. It's $110 move over 5 trading days. That's huge. That's a lot. Now, the size of it maybe is surprising, but we've seen that in 2008, 2007, that kind of thing. And I've traded gold during that time as well. And that's not surprising me. Price can move up 50, 100 points within days. Sometimes on the same day, up and down. That happens. But what surprises me was when the market actually gone down, gold supposed to go up, but it didn't. It's go the other way around. The only reason that actually gone the other way around is because some company, hedge fund or whatever, has to be forced to sell the position. Not just the position that they're making money, but are losing money, but also position that losing money because they had to cover themselves. There's some margin calls, whatever, that kind of thing is actually happening. And then this slow ball into itself and become bigger with more forced selling causes more selling, and then all this, I presume the algo trader computer comes in and push it even further and further and further. So this whole thing slow ball and just getting bigger and bigger and bigger, and then all this suddenly thousands of point move. I've never seen before, even back in 2008, 2007, those kind of area. You have seen a big job, 600-700, even 1,000 point at times, something. But it's like 1 or 2 days and it stopped. Not 5 consecutive days, gone down, quite a lot of points, 4,000 points, 5 trading days. This is the first time I've just seen it. It is quite scary. And the other telltale sign is the U.S. dollar index gone down. Basically on Monday, from 99.9 and comes straight back down to around 98, and then bounce back up a little bit again. That's quite a lot of move as well. And also the US dollar against Japanese yen move basically down from 110 yen to 108, and Swiss franc from 0.98 to down to 0.965, and also the euro, most touting in euro, and I was watching, I captured that. It basically moved from 108.50 to 110.28. I got out around 1110 when it touches the 200-day moving average, because I don't see. I basically my system, basically a short-term system, got out because it is just a fast move, that kind of thing. And so it's kind of what you call scary to look at what's actually happening on the side. But then the telltale sign to say all this forced liquidation is because people lost the position, their margin calls, and then they yank the money back out from US now, also because of the fear of how this spread is going to happen in going to play out in US. And if that's the case, people want to put the money back into Europe, back into Japan, just cover the borrowed money, and they make a lot of money already. So but the panic just caused people to quickly move out into safe haven, and the other safe haven they move out into basically is the bond market. To me, the bond market is another funny thing. We have seen that this market go into the bond market. The hot money going to the bond market back in 2007, 2008 again. And then within a few years, or I think in a year or something, the whole thing tanked again. So the US government able to borrow much cheaper than it used to be. And then the rest around the world, lend the money. Basically all the price, go down and yield going up, 2009, those kind of area. And it looks like it might happen again, as far as I'm concerned. And this time you see it, probably you hear some other news, not just government bonds get bought up, but also other company bonds who are not just triple A's, they're like B's and B minus kind of thing. Those junk bonds also being picking up. Somebody just snapped them up very quickly. Now we have the slowdown in the economy, slowdown in supply chains, and so forth. A lot of those companies that has junk bonds might not survive, and then this might later on just feed on itself, cause another bubble and then another crash. So it just very scary for me anyway. I can foresee some of that because I've gone through that last time. Well, that's 12 years ago. I mean, most of us probably have gone through it. You have survived, never given up, and still in the market. And it's like a case of deja vu coming. And next you probably see Feds coming in, I don't know, hopefully this week or maybe next week or something, and then say something nice. I mean, Jerome Powell already said something on Friday, try to calm the market nerves. But I think everybody and his dogs now in the financial market expecting Feds comes in, cut some interest rate somewhere, instead of waiting into until mid or late March, when the next Federal Reserve meetings happens. They probably have some sort of at least a conversation to calm the nerves further, and then cut interest rate by quarter percentage point in March meeting and so forth. But if the market continues like this, I think the Fed might have to step in even earlier and just basically cut half a point or maybe a quarter point as soon as next week or next couple of weeks. Who knows? But this kind of things happens before. I remember 2007 or 8 that happened. The Fed basically comes in and then moved down by cut interest rate by 0.5%. But I was back down to like 6 or 7 or some percentage. Now we have only highest 1.75% in US. So I don't know how much the Feds can actually cut interest rate. And basically they need those bullets to cut interest rate bullets for the downturn, which I think definitely coming in America. And it just these things is like, for me, again, I say it again and again, it's basically deja vu. To actually look at it also, it's quite interesting to look at how this gray rhino is actually happening. This virus things in China first reported mid-December, and it's been around for a few months already. A lot of people are talking about it, but Europe and America don't seem to care until Italy has an outbreak, and then suddenly all hell broke loose. This show you how the market, how inefficient it is. That people staring at white rhinos or gray rhino, whatever you call them, and the market just don't care about them. And then suddenly the focus back onto the virus, and then everything, everybody basically just jumped out the window and just try to get the money back, and that slow ball in itself. And basically it's a good lesson for all of us. I mean, sorry to say, I mean, a lot of people probably get hurt, lost quite a bit of money, and it's probably my pension fund as well. I'm working still, and probably got hit. And but then it's a big lesson for all of us to actually learn what the market is. Market's really driven by greed and fear, and all these things about market efficiency. Nah, I mean, this might work in university, but in actual market, when human beings playing, the greed of making more money, and we've seen it earlier when the U.S. and Europe continue basically not worry about the virus, and then suddenly now, the fee comes in because there's a spread outbreak in Italy. Everybody just suddenly just worry about the virus, and then the feed comes in, and then the whole thing drop down the U.S. stock market. It just feed on itself, and this also, lead on to that, and got me thinking. I mean, I've been start reading about it already, and I think it goes to be a bit more. It's behavioral finance. Basically, it's how human beings react in the financial market during extremes like extreme greed, when everybody's saying everything is good, and also on the other side, the extreme fear when the virus come in, and then everybody say how bad it is. I mean, just look at it. Now people are talking about in America about demand side problem. Okay, not just supply side. But look at the whole thing. China has been suffering for the last 2-3 months, and everybody, because of the lockdown of the cities and not allow people to travel, transportation is also locked down as well. So of course there's the supply chain issue. Okay, and but now they're coming slowly coming back out. Less of the new cases. Virus is being detected in China. Expect you believe the number or not, but it's slowing down. But around the world, outside China is still ravaging, still increasing. But China is so slowly picking things up. So this weekend I read in Hong Kong Yahoo, basically that Chinese government is organizing buses, trains, even airplane to get people back from the lockdown cities, in back into where they work. Back in the factory, so to speak. So things are coming back along slowly, I think in the next month or so. So things are happening. But on the demand side, people are saying, there will be, lots of deaths, just like China. And there's a lot of people not detected, possibly because one of the cases in Italy, my funny feeling is that it's either airborne, the virus is airborne, or the kit that people have been using to detect the virus is not good. Have flaws in it, most likely, and couldn't detect it. So that's why the Italy outbreak suddenly happened so much. And this is basically just show exactly what the market can do, go for extremes, and then you look at it, and how can I learn from this? Overall, what can we as a trader learn from this? Especially for a new trader, it's really scary. You put some money and boom, suddenly you probably lost everything. Your account got blown up. Got nothing to do with you. Sorry, not that. I mean, not necessarily the things that you've done. There's something outside the market, outside forces come in and just whack you. Give you a curveball, and then your account blow up. But it's an interesting thing point to learn, that if you are only trade a smaller amount, and you probably have got hurt less. But also the other thing is, what I've learned, what I shared at the start, is a lot of people just freeze when they lose out. Their position just dropped. They just stop. They don't have the professional, which the new trader need to learn is do an about turn. Like the rabbit seeing the headlight of a car. They should just run. They should just jump instead of standing there. Don't stand there. Jump and go the other way around, or somewhere. Just escape from the car. It's the same thing here. If you lost money and then you get forced out, there's nothing to stop you to go in reverse and basically short the market. Now, some countries might not allow shorting of shares or something, or make it difficult, but it's also, you can still, like I said before, learn about options. Now I think it's the best time for you to start researching about options, how you can trade and learn about making money when the market is turning down, and you can earn a lot more than a bull market than in a bear market than in a bull market, because people fear drive, which you already seen the market go down bananas, so to speak, very very quickly. Thousands upon and hundreds upon and thousands upon a time like this in the US market. And if you are actually been shorting the market using options, you can make a lot of money. So it's about time to learn, trade, not just always make money in a bull market. You can always make a lot of money, much faster and bigger amount in the bear market, but you need to know what you're doing. But I think it's about time to actually think about, learning from it and start picking up some books and learn about things. And the other funny things, to wrap things up for this week, basically, Lucas. There's some, too much rain last year, and there's a lot of, grasshoppers in Middle East and Africa turned to locusts and been flying around in Pakistan, I think India as well, Middle East, and devastating things. But Chinese have apparently 8 different types of locusts, and they have over time learned to control it. The way they manage it, I'm quite surprised when I read this on BBC News, is using dogs. Apparently dogs can eat a lot of grasshoppers or locusts, and China is apparently send 100,000 ducks into Pakistan to help them to control the locust problem. And at the end of the day, this is a good control kind of thing. It's not a pest anymore, because duck is something that all Chinese eat anyway. I'm not sure about the Pakistanis or the people in Middle East or Africa who eat them or not. But if ducks works in China, why they not use that in other countries as well? But we just have to wait and see if that actually happens. But this locust scare has not been talked about much, apart from in the Middle East or Africa area. And basically, we'll just see how it goes. But everything at the moment, it seems to be dominated by the virus. And I sort of thinking, what will happen next? And I'm just basically waiting in the background and just have a look and see how it's happened. And I basically hope that this update you'll find it useful. And next will be my update of my sample portfolio coming up next. Okay, like I said before, at the start of this podcast, there's quite a lot of changes this week in the portfolio. So first of all, obviously, is Apple. Short term, like last week, is a sell, but medium and long term now is all changed to neutral now because of a sudden large move last week. Amazon, basically, short term is changed to sell, medium and long term changed to neutral now. Australian dollar against USD. Still sell across the board, so no change from last week's position. Crude oil, short term is changed to sell now as well. So last week's short term is buy, but obviously the sudden downturn in the stock market pulled crude oil down as well. So short term is a sell across the board for crude oil, Brent crude, and also TWI. That's the US crude. It's the same thing. Short, medium, long term is all sell. DAX. Well, it's a big change now. Last week, everything is still up. This week, it's total reverse, 180 degrees reverse. So short, medium, and long term is all sell. That's for DAX. Dow Jones, similarly, short term is a sell. Medium term is also a sell. Long term is a sell. FTSE 100 in UK, short term is a sell. Medium term is a sell. Long term is a sell. So like I said before, there's a lot of things that just did about turn. Gold. Short term is a sell at the moment, but long term, medium term is still a buy. Hang Seng Index, same as DAX and Dow Jones, basically sell across the board. So short term, medium term, long term is a sell. Nasdaq is a sell short term like last week. I think Nasdaq was last Sunday was the first one that turned, and then obviously the sudden move down, just caught people by surprise. So short term is still maintaining sell, but medium and long term is now changed to neutral. Nikkei from Japan, short term is a sell, same as last week, but now medium and long term also changed to sell as well. Silver, short term is changed to sell, medium term is neutral, still the same as last week. Long term now changed to sell as well. USD against the Chinese yuan. Short term is changed from buy to sell this week. Medium term still neutral. Long term is now changed from buy to neutral this week. Next is USD against Japanese yen. It's moved from short term is to sell now, and medium term is moved to neutral, and long term is set to sell. British pound against Japanese yen. Short term and medium term is changed to sell, and long term is changed to neutral now. USD against the British pound against USD. Short term is a sell, medium term is a sell, long term is neutral. So same as last week, no change. And Bitcoin. Last week said short term is a sell, so it's continued to be a sell. Medium term is now changed to neutral. Long term is also changed from buy to sell, so it's a sell now. So people has been saying last couple of weeks, Bitcoin will go back up like a gold, but it looks like gold is not making new highs, coming back down. Well, it did make new high Monday and come back down now, and then Bitcoin just didn't do much, basically just come down. So it's basically a sell. One thing though I'm introducing this week into the portfolio, this sample portfolio, is something called LTL ETF. Basically, it's an ETF that is tracked to 20 years U.S. Treasury bond. Basically, the full name is iShares 20 plus year Treasury bond ETF. I think it's traded in America and kind of thing. But basically, I'm tracking this now on my share scope. Essentially, I can also trade that as well. I've been tracking at the moment on LCG, my spread betting account, and with a view to try to just keep track of the this trade price. Essentially, this basically look at the long-term, long-year dated U.S. Treasury bond, and basically, I want to find out how much actually going up. Obviously, the price go higher means the Treasury bond price go high and the yield comes down. So it does sort of have an effect on general market condition, obviously, by it. And I just want to keep track of a bond because I think that's part of missing in my sample portfolio. So give you a bit more view of what's actually happening in the bond market. So instead everybody is saying, oh, bond have actually gone up, there's at least now one entry at ETF to track it. So basically that's the end of my portfolio update for this week. It has been a scary ride this week to see what happened next. We're all waiting for Federal Reserve to do something this week, but will they actually do something? I don't know. And as a trend follower, I tell you this things to wrap things up for today. Follow your price movement. Your system say go short, go short. Do not think about what you have lost in your previous transaction. Case in point, I lost a bit early in the week as well, but I managed to follow my system, and system say go do an about turn, short the market. You go short the market, and don't worry about the try to make money or not, because we're doing this long term. Sometimes you have gaps, and just part of business is part of the cost of doing business. Sometimes you get inevitable gaps that work against you as well as work in your favor. You cannot have everything is in your favor. Sometimes you lose something, but the main thing is you follow your system. The result is not important. I know we all get into trading because of money. I was one of them started. But the system, so long as you have a positive edge over long term, you will have make a lot of money. But in short term, is quite statistically independent. So the previous last move may be winning, doesn't mean the next move will be winning. It could be total loss or something else. Our main focus is to follow the system and to cut down our losses. So remember that's very important, especially in volatile situation. Follow your system to the T. I know it's very difficult sometimes, especially when you lose a lot of money emotionally, playing you up, and you don't want to follow, you just want to throw things out. But don't. So long as your system has a positive edge, follow it through. Because a good time will definitely come, and it's always bad times. So it's like the sunrise, sundown, that kind of thing. It happens, but we take a long-term view and you make money over long term. So don't worry about it. Just stick to your system and continue with your system. Okay, don't just never give up. This is one of the things that I'll have to say a long time ago, and I constantly remind myself and everybody else who listen, who I would basically say, well, all new traders to become successful long term, they all have to face a bit of downturn, bang their head against the wall, lose quite a bit of money. If they have a mentor, they probably lose less. The learning journey is shortened, but that doesn't mean that you won't make any many problems. You still problems. You still lose money, but your journey probably shortened, and you have at least somebody to bounce your idea off to. But those one who don't have a mentor and just want to continue to plow on, well, so long as you have a positive edge system, expectation system, just use it, follow it, and you will get there. Just take one step at a time. Baby step counts. So that's the end of my podcast, and I speak to you next week. Bye for now.